downtown Victoria Island, Lagos. Nnamdi Olisaloka is joining us. He's a fixed income and currencies analyst at Zcrest Capital. Nnamdi, good morning. It's good to have you on the program today. Bring us up to speed where we are. Read the Thursday's fixed income market for us from a dealer's point of view.
All right, so in the market on Thursday, the major activity we saw was the OMO interventions by the central bank, where the CBN came into the market and sold about 553 billion naira worth of OMO bills to mop up inflows from maturing bills. So we had about 268 billion naira in OMO maturities yesterday, but the CBN floated the 182-day and the 364-day, which were offered by the DMO at the previous day's NTB auction. We saw significant demand on the 364-day, about 497 billion, and about 80 billion on the 182-day. And the CBN sold to all subscribers, with rates maintained at 12.5% on the 182-day and 13.5% on the 364-day. So consequently, we saw slight bearish activities in the market on Thursday. And also in the bonds market, the market was relatively quiet, but following the sentiments we've been witnessing in the past 2 weeks, following the FGN bond auction that was well subscribed, market players have been bullish so far, and the sentiment still persisted in yesterday's session. We saw the most demand on the 2037 bond, which compressed about 6 basis points on the day. So those are what we saw in the market. The OBB and overnight rates in the money market trended higher to about 11 and 12% because of the liquidity mop-up. We estimate about this liquidity to have been about 120 billion closing yesterday because of the 553 billion naira almost sale by the central bank. We expect activities to be relatively quiet closing today, being the last day of the week, with no significant activities expected to take place in the market.
Okay. In terms of the currency side, how does this all play out with the currencies market? All these activities, of course, it all goes down into how investors want to get in and out of the market, and it all comes down to currency.
All right, so we've seen the sell-offs have been moderated. Sell-offs by offshores have been moderated. We've not been seeing so much sell-offs from the offshore as we've been seeing in the past month. We've only seen some intermittent sell-off on the short end of the T-bills curve, but on the bond space and the longer end of the curve, we've not been seeing so much activities from them. There's been some pressure in the iron market for the past week, but this week it's been relatively stable at about 363 naira to the dollars. The reserve position of the central bank is still under pressure. We saw the external reserves fall below $44 billion as published yesterday, now at $3.97 billion, though the CBN came out to say that we should not be overly concerned about the fall of the reserves because it's still sufficient to 11 to 12 months of imports, which is far beyond the 2 to 3 months global standards. So, and they also reiterated that they're in a strong position to continue to provide support to small and medium enterprises to boost economic development. That was the sentiment that was put forward by the Director of Corporate Communications of the Central Bank, Okorafor. But at the interbank, the currency remains stable, and in the parallel market, is still rate stable. So we've been seeing stability for the most of this week.
Okay, so as a fixed income and FX dealer at Zcrest Capital, where is the sentiment of local investors at the moment as we get towards the end of the political cycle? What is their own mood in terms of whether they are stepping up their engagement at the debt or fixed income market, or if they are trying to lounge around a little bit, waiting for a catalyst? Will that be the next MPC decision? Would that be liquidity? What would that be? What are they looking for?
All right, so far, in the past 2 weeks, like I said, we've been seeing renewed interest from local investors. They've been coming into the market, they've been buying. Yields were as high as 15.5% on the long end of the curve about 2 weeks ago before the FGN bond auction. but the DMO recorded significant success at its last bond auction with significant subscriptions on the 10-year bond, 2028. And so far, the sentiment after that auction has been bullish. We've seen yields on the long end of the curve as low as 15%. But notwithstanding that, what market players are looking at now, we are expecting the fourth quarter calendar of the bond, the fourth quarter bond calendar. At ZQuest Capital, we think that the amounts, the planned borrowings by the DMO would be more than what they put forward in the Q3. So our outlook is still slightly bearish, though we know that local investors have been attracted to yields at current levels. We are seeing the one-year bill as high as 15.3%, yielding as high as 15.3%, and yields on the mid to long end of the bond curve are also yielding as high as 15%. And we're seeing local investors attracted to yields at those levels. But we still expect, we have a bearish outlook because the developments in the global markets, we are seeing the US Treasuries trending significantly higher. As of yesterday, we saw the 10-year Treasury as high as 3.19%, and there were sell-offs in other emerging markets. Even the Nigerian Euro bonds that had been rallying for the past 3 sessions, they gave up gains and became significantly bearish. We saw the 30-year instrument, the 2047 Nigerian Euro bond, sell off beyond the 8% mark as high as 8.2% at the moment. So we are not outrightly bullish on the market. We expect that with all these developments in the coming months, the market will still trend bearish.
Thank you very much. Nnamdi Olisaloka, fixed income and currencies dealer at ZQuest Capital, live to us from FMDQ Exchange Place in downtown Lagos.